Good afternoon. Welcome to ABC123 Trader. This is Mike, and it is 1:52 p.m. of October 25th, 2020, and I just want to show you a little bit about the scalp trader I've been working on for, it doesn't matter what you're trading, but I try to really focus it on for the ES traders out there. So how this system works is I can go into the longer time frame charts, but I'm going to keep this one short today. But I'll just show you the two charts I'm looking at. I'm looking at a 240-minute chart for analysis here. Okay, let me just scrunch this up. And I'm also looking at, the other one here is my 10-minute chart here. So as you can see, the 10-minute chart with support and resistance, areas of interest with the volume point of control, etc. Okay. Right here, volume point of control to touch this area. But other than that, let's take a look at the scalp trader. What the scalp trader I've designed, and you can download it on the Discord for trial there. So it's in the investors pack. But what it does, it allows you, of course, to scalp or go for longer trades. And I have a lot of parameters here. But how it's set up is, what you do is choose your account. So I use mine or this one. And I have it set for a 48 tick 1-1. So it means every tick it goes up by 1. And it's a 48 tick reversal. Everything's set up as is for this system. You can change it, do whatever you want for your parameters. But this is how it's designed. Now I put in 3 strategies for you guys. And you'll have 3 strategies when you load up. But you can always design it and change it any which way you want. So, and I'll get into the strategies here right away. And everything else is pretty much, there's a lot of parameters here for zone colors and just basically charismatics for yourself, okay? And also whatever your fib retracement lines are. Actually, you know what? I'm going to change the continuation level right now to 28% for now. Just for fun. Okay. There we go. No, oh, sorry, not 28. Did I have a 38.2? I'll just leave it as 38.2. Yeah, it's good enough for now. Okay. So let's get into this indicator and see what it's all about and how I trade this. Okay, so on Friday the market was going down, and so it was going down basically from 9 to 11. And then it reversed and went up the rest of the day. There's your V pattern if it were looking at a longer time frame chart. But what the key is how you want to trade. You want to short below the cloud and trade above the cloud. Don't trade in the cloud. That's the bottom line. If you can be strict on those rules, then we can get into the 3 trading strategies. So the first trading strategy that I have set up is just called buy breakout. Yeah, breakout. So basically, anytime you see the wick pull back, you can click the buy breakout and it'll set up for the next bar. And I have it set up for just to make 4 ticks on 2 contracts. So 8 ticks, that's $200. Or sorry, it's $100 for every time you click it, hopefully to make $100. You can always change, like I said, the settings. And then what we have is called buy and sell baseline. And what it is, it's the outer perimeters of the cloud. So if you're following the trade and you're inside the cloud and you know you're going to break out, you can have it set up here. The price will set and away you go. But this one right here, the buy and sell ATR and the baseline cloud, those are the actually 4 buttons I like the most for this system. And how it works is once you start breaking out of the cloud, what you want to do is wait for a deep enough retracement. My rule of thumb is I have to break this red line. Okay? Once it breaks that red line, I can say sell ATR and wait for it to come back to continue on and continue trading. So on this example, on Friday we had 1 opportunities, 2 opportunities, and 3 opportunities to make profit. So when you look at it, I'm going to stay in draw mode here so you can understand. and I have 2 contracts running. So and I use this zone 2, this golden line. You can always change it to different zones that I haven't set up on the parameters. But you'll get in here. My first profit is usually when I get out for 6.5, and then my second one would be Merry Runner, and I'd hit here. I get up for 10 points here. Second opportunity would pull back again. It wasn't deep enough. I don't take the trade. Third one, it's deep enough. I get into the trade. Here we go again. 5 points here. Did I get stopped up? No, I got stopped out here. Boom. 6 points there. And I get knocked out. Wait for the deep pullback. I'm looking at also my support and resistance on my main chart. See if I can continue on. Deep enough. Let's try it again. So we enter here again. 4 points there. And this one was much smaller. 2 points there. So for the morning, from trading from 9:30 to 11, we received 10. I'll just round it really quickly here. 10, 20, 30, a little more than 30, but let's say 32 points on the ES. 3 successful trades. Just being patient enough. Now, when you start entering the cloud, we want to break through the cloud, and this is called the breakout. But the rule of thumb is if the cloud is thick and trending down, you don't want to break out like this. You have to wait for the retracement, see if there's support and resistance, and then you can go for it. That's the main key. Now, there's a couple other lines here that I want you to stay focused on. These dotted lines are just your regular swings, so you can see where your support and resistance are to look to the left, to trade the right. This is the kind of the mid-range, between the up or the top and the bottom. So you know if it does pull back more than 50%, 60%, you know you could probably get into it. And then lastly, these dotted lines are called scalping. And what I want to do is see which direction the scalp is going. So it's going up. We want to get into a retracement and see how it touches the scalping perfectly within this zone, plus this stop out and coming back. I feel comfortable to get the trade. If it's even a shallow retracement, you start using breakouts, saying, okay, look how far the scalp is from here. I think I could get 4 ticks out of here. Here we go again, deep enough. Okay, we can get 4 more ticks. It all depends how you want to do it, but that's what it's for. It's just to give you more confirmation and bias on which direction of the trade is. And if you go back and forth, and if you're patient enough, there will be some days that, you're not getting any really good trades in. Like this is going down saying, oh man, and it comes back, but here you go. Boom, 7:30 in the morning, get in, 1 trade here, 2 trades here. This is actually a legitimate trade. You're breaking out, plus it's touching the mid-band. Enter, away you go, 3. And that one I wouldn't do. Coming down, here we go again, 1. Close enough for 2, but I'd be a little nervous there. But it's good. Another trade here. Another trade here. Another one here. And then 2 really tight here at the end. And it goes over and over and over again. And the reason why you want the deep retracements is you just want to have enough confirmation that you can stay away from all the noise, the fighting. So here, for example, there's almost 100,000 contracts here, 90,000 contracts bouncing up and down, up and down. I don't want to sit there and get stressed out. I'll let them play all this all the way up here, get in deep enough, and I'll make my points. Because even it doesn't look like as much, but when you get into it and you start, depending where your stop is, but that one was terrible. But even from here to here, even if you just take 2 contracts and stop out there, there's your $475. So it all depends how you want to trade. Other than that, that's all I want to show you in this video. And you guys have a great weekend. And I'll see you, hopefully see you on the trading floor tomorrow. Other than that, just pinpoint your trades, trade safe, and you guys have a great weekend.